Today's episode is fascinating as we delve into a topic on everyone's mind: how to get rich during the 2024 recession. It's a time that many view with apprehension, but as history shows, recessions are not just about economic downturns. They're also ripe with opportunities for those who know where to look. Join us as we navigate through the complexities of the economic landscape and reveal how you can turn this recession into a powerful catalyst for wealth building. Tip number 1 is all about safeguarding your sources of income. In uncertain economic times, your priority should be to secure your current income. If you're in a job, access your position's stability and your employer's financial health. If there are doubts, start looking for alternatives within your industry. Additionally, consider diversifying your income. This could mean working freelance, starting a side business, or exploring passive income streams. By strengthening and diversifying your income sources, you'll be better positioned to handle whatever the recession throws. Moving on to tip number 2, enhancing your savings. In times of economic uncertainty, having a robust savings plan is more crucial than ever. Begin by thoroughly reviewing your monthly expenses and identifying areas where you can cut back. This might include reducing luxury expenses, finding more cost-effective alternatives for necessities, or simply being more mindful of your spending habits. The goal is to increase the amount you can save each month. These savings provide a safety net and can be used for strategic investments that can pay off when the economy rebounds. Tip number 3 focuses on smart investments. During a recession, keeping a close watch on your investment portfolio is vital. This might be the time to reassess and rebalance your investments, focusing on investments to weather economic downturns or even thrive during them. It's also an opportunity to look at long-term investments in assets whose prices have dropped due to the recession. While some risk is involved, informed and strategic investing during the downturn can yield high returns as the economy recovers. Let's look at tip number 4, invest in discounted stocks. A recession often leads to lower stock prices, presenting an opportunity to purchase stocks at a discount. This can be a golden chance to invest in high-quality stocks that might have been too expensive before. When the market eventually recovers, these stocks could significantly increase in value, yielding considerable returns. However, conducting thorough research or consulting with a financial advisor is crucial to make well-informed decisions and minimize risks. Tip number 5 is about tracking your net worth. Assessing your financial health regularly is vital, especially during a recession. Keeping track of your net worth, which includes your assets and liabilities, provides a clear picture of your financial standing. This practice helps identify improvement areas, whether increasing your assets or reducing debts. Moreover, monitoring your net worth can be incredibly motivating, as it allows you to see your progress towards your financial goals, even in challenging economic times. Moving on to tip 6, planning for the future. Even during a recession, it's critical to have a forward-looking mindset. This involves crafting a solid plan for your investments and earnings. Instead of making hasty financial decisions based on the current economic climate, focus on creating a strategy that safeguards your investments and savings regardless of market fluctuations. This could involve diversifying your portfolio, investing in recession-proof industries, or setting long-term financial goals. A well-thought-out plan can provide a roadmap to navigate the recession and gain a stronger financial position. Tip number 7 is working on your 401k. During a recession, cutting back on contributions to your 401k or other retirement plans might be tempting. However, this could be a missed opportunity. If your financial situation allows, continuing or even increasing your contributions can be advantageous. This is especially true when stock prices are low, as you can buy more shares with the same amount of money. Doing so lets you position your retirement portfolio for potential growth when the market recovers. Tip number 8 is about generating passive income. One of the most effective strategies during a recession is to create sources of income that require little to no daily effort to maintain. Passive income can come from various sources, such as rental properties, dividend stocks, or online businesses. The key is finding opportunities where your money works for you, providing a steady income stream even when the job market is unstable. This enhances financial security and allows you to explore other ventures of interest. Tip number 9 focuses on investing in properties. Real estate often presents unique opportunities during a recession. While the stock market may experience significant volatility, the real estate market typically reacts differently. Property prices may decrease during economic downturns, offering chances to purchase real estate at lower prices. Additionally, property rental income remains relatively stable, even in a recession. Real estate is a potentially lucrative investment for those looking to expand their portfolio and capitalize on market conditions. Our 10th tip is sell unused stuff. A recession can be a great time to declutter and convert unused items into cash. Look around your home for things you no longer need or use. Online platforms like eBay and Amazon provide convenient avenues to sell these items. This helps tidy up your space and offers an easy way to generate extra cash. It's a simple yet effective strategy to boost liquidity during tough economic times. Tip 11. Moving into survival mode. This is all about adapting your mindset to the realities of a recession. Embrace the mantra, spend less and earn more. This means being more frugal with your expenses and seeking additional income streams. It's essential to recognize that the financial landscape changes during a recession, and so should your approach to money management. By being proactive, creative, and disciplined about your finances, you can effectively navigate the recession and emerge in a stronger financial position. The number 12 tip is to explore cryptocurrency investments. Amid economic uncertainty, some investors turn to cryptocurrencies as a hedge against traditional financial markets. Bitcoin, Ethereum, and other cryptocurrencies have shown resilience during economic downturns and can diversify your investment portfolio. However, it's essential to research and understand the volatile nature of cryptocurrencies before diving in, and consider consulting with a financial advisor to make informed decisions of this rapidly evolving space. Including cryptocurrency investments in your financial strategy can be a forward-thinking approach to wealth building during the 2024 recession. Number 13 is to invest in yourself through education. Investing in your skills and knowledge can pay dividends in the long run during a recession. Consider taking online courses, attending workshops, or pursuing certifications to enhance your qualifications and make you more valuable in the job market. It improves your current earning potential and positions you for better opportunities when the economy starts to recover. Education is an asset that appreciates over time and can be a valuable resource during challenging economic periods. The 14th tip is to network and build relationships. Networking is crucial, especially during a recession when job security may be uncertain. Attend industry events, join professional organizations, and connect with peers and mentors who can provide valuable insights and potential job leads. Building a robust professional network can open doors to new opportunities, collaborations, and partnerships to boost your career and financial prospects. In times of economic turbulence, the strength of your connections can be a significant asset. And there you have it, 14 strategic tips to survive and potentially thrive during the 2024 recession. Remember, challenging economic times can catalyze growth and opportunity if approached with the right mindset and strategies. We hope these tips inspire you to look at the recession as a chance to reassess, reorganize, and reinvent your financial journey. If you found this video helpful, please give us a like, share it with your friends, and remember to subscribe to our channel for more insightful financial advice. Stay savvy, stay prepared, and turn challenges into opportunities. Until next time, take care and stay financially wise.